Good morning. It's Harvey Jackson. Just going to get through some of the news here. There's somewhat calm in the Middle East. I say that the U.S. Quit firing on Iran. Soybeans, corn decline as slumps on Middle East optimism. So they stop fighting, but the next headline you will see that they still control the strait, not seeking talks. So this was just posted like 14 minutes ago, which takes a few minutes to be able to put this together. But it's a later update. But the market is still kind of trading the first headline, not accepting any truth that's coming out of anywhere over there. So yeah, Russia attacks, kill one, damage vessels in Ukraine region there. They hit a vessel and they continue to, and vice versa. Red Sea shipping slows after Houthi attacks on the Saudi Arabia. So these two wars have been what's driving the market up with supply constraints, and then you've got the whole weather situation with the heat in Europe and just basically drying out that crop, and North America as well. Cattle posted strength on Friday. Cattle on feed comes out after, and there's actually a cold storage report as well. It's probably should drive up the red meat market for sure, from what I've read anyway. And I'm not a cattle expert, but it definitely looks like the market might even take a pretty good gap here and move higher here. Heat, you can see the middle of the U.S. and you got warnings all around it here for red flag warnings, you name it. So it's quite hot. And yet you look at the 7-day forecast or anomaly, and there's going to be some moisture there. And again, look at that. Edmonton's going to get hit again. Imagine that. This is your departure from average for the growing year. You can still see that there's some dryness along Regina, south, and towards Winnipeg as well. And then your Fort St. John is quite hot, dry over there. Number of consecutive days of temperature above 25 degrees. I just picked one. There's multiples, but I would say over 30 degrees is devastating. But you can see that there's a lot of days that it's been that warm. You can see that's a scattering right across the prairies here. And then accumulated precipitation just for the last 14 days. With that heat, you need some moisture to be able to keep plants going here. But so just watching for this area here, if they it depends on crop stage and everything else, but that's definitely going to have an impact that they need some rain down in here for sure. And here's your soil moisture, and it's in the same area. Quick look to see how the temperature is going to evolve here. So we get a bit of a cooling going into the corn, soybean growing area. That could actually help this market pull back here as well. You see there's some moisture that's hitting that area, and then you've got, I'm going to say the yellowhead corridor. Again, looks like we're going to get some moisture, and it looks like it's going to be more devoid in that same droughty area. So we'll have to be watching that for sure. So canola is down 18 at 806. Soybean oil down $1.63. It's gapped lower. Crude oil down $6.26 at $83. Brent is down $7.82, and diesel fuel is down just shy of 10 cents at $3.99. Soybeans down 34.5 cents at $12.19. Minneapolis wheat down 7. Hard red winter down 8.25. And your Chicago wheat down 8. Milling wheat is down $1. Corn is down 13, and the Canadian dollar is down as well. So you quick look at it here, you can see that the last couple of days, the last trading sessions, today big candle right now. We'll have to see how it continues to trade as the market does wake up a little bit later than this information session here. So here we are with the European, and we blew past the 10-day moving average, the previous resistance as well, and now we're punched through there with a gap. Same thing with soybean oil. We've created a gap on and punched below the 10-day moving average. Soybeans, though, it's kind of stuck right at the 10-day moving average, and looks like it's going to try to get through that previous high there as well, but it did bounce off of it there this morning. And these gaps are all similar. Crude oil is at the gap, and then your soybean and canola as well. Your diesel fuel gap lower, gasoline gap lower, And here's your Canadian dollar, just chopping sideways. Really, it says lower, but it sure doesn't feel lower. But basically chopping sideways after a bit of a break from last week, still trading lower. This is just your market expectations for the Fed funds rate. So blue is today, and red is for next year expectations. Wheat. Um, Now, everybody could draw their lines in different areas, but you've got your 10-day moving average and this fading of your wheat market from the highs that it's made. Looks like it could still somewhat be supported, but when you look at Kansas, we're not close to that same trend line. And depending on how you draw it, you might draw it that it might be broken. But again, still above the 10-day moving average. Chicago, which trades more volume, blew through the 10-day moving average. Your European rapeseed trading below the 10-day moving average. And here we are with the corn futures chopping away right at the 10-day moving average. Looks like it has broken that upward trend as well. Quick look at the meats. You'd still say that that's a downward trend, even though you got a couple of green days, Thursday and Friday. But I would expect that we're going to see some upward move on this as well with the cattle on feed and low inventories in the cold storage as well. And that's all I have for you.